Mastercard, ticker symbol MA, is currently trading at $517 a share. Over the last year, the stock is up about 12%, and over the last 5 years, it is up around about 99%, which we've to compare against the S&P 500 over that time period. You can see it is beating the market. What we're going to be doing today is looking at Mastercard's most recent earnings and then taking it to my automated stock valuation spreadsheet to see if it is a buy or a sell using the discounted free cash flow model, comparable company model, dividend discount model, and Ben Graham formula for intrinsic value. So let's put in the ticker MA, and this will load up all the latest company financial data so we can have a deeper dive. If you're interested, check out my Patreon. It's the $4 tier. Anyway, let's get straight into it. Mastercard, $517 a share, $472 billion market cap, PE ratio of 37, which is higher than the market average of 27. Earnings per share, $13.89, and a beta of 1.06, meaning it is slightly more volatile than the market. Target price, analysts have it as a buy, with a target price of $613 a share. And they do pay a dividend, 0.6%, meaning you'll get paid $3.10 a share. And it's a very safe dividend, $2.8 billion, which is 22% of the net income and less than 21% of the free cash flow. So let's have a look at revenues here. All-time highs, ignore the trailing 12 months here. It's the full year 24 earnings, which is $28.17 billion. Now, if we do go here, this is the fourth quarter ones. We don't have the full year ones here, but you can see here that on the quarter, revenues are up about 14%, 6.5 from the prior year to 7.5 in the current year. So everything is up. And also we can just see net revenues increased 14%. On the payment network, net revenue is 13%, gross dollar volume of 12%, 2.6 trillion. 12% of the volume growth to 2.6 trillion. Cross-border volume growth at 20%. Switch transactions 11%. Everything is up, which is looking good. So next we will have a look at net income. All-time highs, 12.87. Are they able to generate more free cash flow? Yes, they are, 14.13. And if we look at operating cash flow versus CapEx, you can see that CapEx is up, but operating cash flow is at all-time highs. So that's outstanding. They're buying back shares, they're rewarding shareholders, and they have done consistently. So let's have a look at the discounted free cash flow model. Let me just override some of these numbers here to the averages. What we'll do here is look at the future free cash flows, discount them to today's value, and see if it is a buy or a sell. So currently it puts us $360 a share, so not a buy. We're expecting around about 31 and 34 billion in the coming years in terms of revenue. Analysts say that is a little bit on the bearish side, so we will increase this number ever so slightly. We'll do about 13%. That brings us to 380. Net income margins, I mean, they actually have been decreasing, so we'll keep this to be on the more bullish side. And if they were to match the current year of free cash flow rate, it would still be 466, so not a buy on the discounted free cash flow model. Dividend discount model, you can see here, well, we need to keep on increasing this. And yeah, doesn't really work for these. I mean, it's 8.5. If they were able to increase it at 7, well, I suppose 7.8%, 8%. Yeah, I mean, as long as they increase it more than 8% a year, which they are doing, then it does look a buy on the dividend discount model. But I don't think this works for some of these stocks. But you can see here, this is the discount rate of 7.5. The average growth rate is actually higher than this, but you can see here it would be at $550 a share. Ben Graham formula for intrinsic value. He doesn't like many stocks at the minute, but let's just see what we can see. Mastercard is expected to grow at 17.37%. But still not a buy, $300 a share. So comparable company model. This looks at some companies we can compare it to, similar industries and similar sizes. We look at revenue growth rates, EBITDA, net income, profit margins, price to sales, price to book peg. And then the specific metrics in the model are EV to revenue, EV to EBITDA, PE, and forward PE. Obviously, Mastercard's closest is Visa, ticker symbol V. And then we did Square, which is XYZ. And then we also did PayPal, just to compare it to. But we'll compare against Visa specifically, or sorry, not Square, Block, and then we can have a deeper dive. So let's just let this load here. It was taking a long time. I think a lot of people, Google's not really handling it very well, but we will continue anyway. Let me just quickly go to, let me change the order of these again. And let's just change this to Microsoft quickly and let it refresh. You can see that it loads up the ticker immediately, but then we're just loading the company data. Fine. So now we'll go ticker symbol V. And we will wait a second for Google to load it. Just while that's loading, if we were to compare Visa and Microsoft, Mastercard, you can see that they are pretty neck and neck over the last 5 years. Mastercard beating it ever so slightly, but the recent drop off, Visa is catching it. Over the last year to date, though, Visa up about 25%, Mastercard only 12.5%. And is that loaded? No, it hasn't. It's only loading the Square and Block. That's unfortunate. Let me try this again. I'm just going to load up Visa on everything just to see why it is not doing it. Oh, the only one I do want to load is the second one, but we can compare it anyway, just to see. So revenue. Let's change it back to Microsoft. Loading. And then we'll go V. We have Visa there. Google, why aren't you loading the data? But anyway, there we go. A. And then we'll do XYZ and we'll do PYPL. God, we got there in the end. I think my computer's screaming though, which is one of the reasons why this is taking long to load. So Visa is the largest with 650, Mastercard 470 revenue. Visa is the highest. Revenue growth rates. Obviously, the smaller companies are a bit higher, like Block, but Visa and Microsoft, sorry, I keep on saying Microsoft. Mastercard is higher with almost 11%, and on the 1 year higher again. We'll just compare the two here. Profit margin, second highest. Price to sales, lower than Visa. Price to book highest. PEG lower than Visa. EBIT revenue lower. EBIT higher. P higher and forward P higher. So if we would just compare Visa and Mastercard directly, puts it at around about $493 a share. So not a buy, but pretty close. So in terms of Visa or Mastercard, my mistake, apologies. I mean, they both do look pretty close to each other in terms of valuation, but they are both great picks. So I wouldn't, anyone who does have those stocks, it seems they have consistently beat the market over the last few years. And whether or not they will continue is a different question, but they have stable revenue, increasing margins, and generating lots and lots of free cash flow.